Hey everybody, I'm Charting Man Dan, joined by Chart Guys Joey here in Thailand. It's sunrise morning for us here. We're sitting out on Joey's deck with his orchids. It's been a fun adventure so far. We're going to do a laid back stream talking a bit about his transition in terms of trading moving here, and then all the topics we've been talking about while we've just been chilling. We'll talk about silver and whether the top's in, and a lot about charts and stuff. So far we've been bouncing around, whipping on the back of his scooter up mountains and waterfalls. And last night we had a really nice barbecue out by the sunset. There's a bunch of dogs in the neighborhood that come around. But great experience so far. We're heading to an island, Samui, tomorrow for 4 days. And I'll be heading home in about a week or so. But nice and easy. Joey's got a local connection, so getting not the tourist view of things, which is always nice. He's also got a sweet spot in terms of a little coffee shop nearby, scooter ride away, saltwater pool, gym, things like that. So having a blast, but definitely glad to check in. Feel free to ask any questions along the way. Again, laid back, so we're down to jump on a bunch of topics. Hey, Joey.
Hey, Dan. Hey, everybody. So thanks for tuning in with us. Pretty special to have Dan here because as you all know, we lived about 20 minutes away from each other in North Carolina. So that was like very regular meetings every weekend for sure, and oftentimes in between that. So I'm just about to hit 6 months here in Thailand, definitely loving it, but also there's plenty of home that I miss, and my friends being a big part of that. So to have Dan out here and be able to kind of do the old things and also show him the new things has been sweet. So yeah, excited to kind of talk about it because, as a trader, one of the big upsides is that we can do this from anywhere in the world. And that's kind of what spurred me to make the move was, it started with an earlier phase of that where I said, I'm kind of done with winters. I can work from anywhere. Once it gets too cold out, my bones get cold. I don't like it, so I'm going to spend the winter in Thailand. And I did that last year. And I came out here and said, wow, that's a pretty cool experience. There's a lot more that I'd like to learn about that. And as a trader without like roots in of a family or anything like that, I said, okay, well, let's just do it. The freedom to try something like this and not really fear big financial repercussion. Not that it is wildly expensive to pull off or anything. I mean, in general, moving gonna have some expenses, but Thailand is a lot cheaper than the US. So that's not the reason for the move, but it's definitely a nice part of it. But to not fear financial risk and to not have any work adjustments from it, I just said, okay, I'm gonna jump into the deep end. If I like it, I'll continue to stay. If I don't like it, I'll come back home. So ended up selling off most of my stuff. And I've always been a minimalist, so it was actually pretty cathartic to just let go of a lot of stuff. And yeah, my whole life pretty much got down to 2 suitcases and a little duffel bag. I kept my tools back at home because some folks know I used to be a building maintenance man. That's like my insurance on my trading. If I ever go insane and liquidate everything, I know I can go get my drill and hammer and generate some income. So yeah, I left those at home. I left my car at home as well, and everything else just fit in a couple duffel bags. So it felt good to get the cleanse, simplify, and that kind of just plays into the whole theme and spirit of Thailand. It's very simple living, and I like that. I like it a lot. It's been a huge breath of fresh air. Everybody around me, they're all doing simple living. Like, you can get into the ritzy stuff in Thailand if you go into Bangkok or some of the heavier tourist areas. There's definitely fine offerings and whatnot, but that's not what I'm doing. Like, we're out here on a rice field with the mountains on the horizon and the community garden back there, all the dogs around, a little pond slash lake. They call them lakes here, but that's a pond. That's a pond. But
One of the biggest, sorry to cut you off.
no, go ahead.
One of the biggest shifts for me coming here is obviously the time zone difference. Right now, just a clean 12-hour shift, and so Joey and I were up real late last night with that silver move. We're working on maybe 3 4 hours of sleep, but internet is great everywhere. Cell service, the cell service on the top of a mountain is better than my house. My house doesn't have cell service because I'm in a valley, but that's a big plus where we could live stream from so many places that we couldn't in the U.S. So their infrastructure in terms of internet is very good.
Yeah, it's crazy too because the phone plans as well are really favorable, not just financially, but in terms of what they let you do. Like they won't throttle you. I mean, there's some plans that are like unlimited, and then they'll throttle you at a certain point, but you can pay a bit more to get a truly unlimited plan with truly unlimited tethering. And I spend a fair amount of time in a rural village in northeast Thailand, and I do all my streaming tethered from my phone in a really primitive village, and it's just crazy to be able to get 450 megabyte per second download and 250 upload somewhere like that. And that's the case all over the place. I've yet to be somewhere where I don't have really good cell phone internet, and then many places have fiber as well. So like my home here has fiber, and I'm getting 700 down, 350 up, and yeah, it opens up the door for what you can do, because then I can travel within and not worry about, am I going to be able to rely on my internet to be able to put trades on or do a stream or something like that.
And so Joey's setup reflects that, where right now, we got the laptop in front of us, and then we got two monitors, which are just little travel size monitors. And, he uses his phone a lot more. Obviously, you see all the traders with their 6 8 screens or whatever, but just a mobile version of being comfortable with your setup to be able to kind of wing it wherever you're at. And that's obviously essential if you're traveling as a major part of your life. So yeah, great experience so far. It's a dry season. You don't have to check the weather. It's the same every day, just solid mid 80s. We're closer to Chiang Mai at the moment, but it's a little cooler than Bangkok, which is nice. Island's going to be a bit hotter, but yeah, lots of fun. We actually have another buddy from Asheville that we're going to meet up with tomorrow or the next day. So just a little tour. But yeah, eye-opening for me as well, in terms of like, I need to do more of this, more different countries. It's easy enough to travel within the US and be in your little comfort bubble, but culturally and just experiencing all the different things has been great. And also having the local connection in terms of being able to ask, all these little nuanced questions of curiosity of how do you do this thing here? That's been great. So yeah, feel free to ask any questions. We'll get that in just a moment. Some of the things we've been talking about, someone asked, how much are we talking about trading? It's roughly like 15%. We'll be sitting waiting for our coffee or something and just dive into a trading conversation, but definitely not the main topic of conversation. I guess Thailand would be the main topic, asking all the questions. But some of the things we've been talking about recently, of course, the silver move. I guess we could start with silver, huh?
Yeah. We should just talk about commodities in general, and because that's the preface into the silver move. Because obviously, silver is the talk of the town right now because it keeps going up, and a lot of people are having a lot of difficult times with the move because it feels like it should top, but it's not topping. But having been running the commodities channel and the chart guys for, I guess, 5 or 6 years now. I think it was after COVID or sometime around COVID that I started doing that, and spent a lot of time with Lamont and DMs, kind of learning from him because he is just such an insane wealth of information, and really kind of honed in and hammered the concept into my mind that commodities trend further than people anticipate, and they balance longer than people anticipate, meaning that once you're trending, on a normal asset like a stock or an index, something like that, there's a point where you reach an extended level, and that's kind of similar across names. There's a little bit of difference in between names, but you have this like threshold of like, okay, this is extended. In commodities, it's way different. It's way different. So you need to approach it different, and that was something that I had heard, but I didn't believe. And then I learned it the hard way, which a lot of folks are learning that the hard way right now as it's in the limelight, and really what the adjustment was, because like you can hear these things like, okay, trends longer than people anticipate and balance is longer than people anticipate. Well, what do you do? And the whole thing is that you don't do anticipatory trades as often. It's more so just get with the trend. Like really, you want to lower your IQ, not try to be so smart about it, and just like, oh, if it's going up, I will continue to play up, even if it feels crazy. So like the last 2 trading days, like Dan and I sitting right next to each other trading, and I'm buying these opens for pushes on up, and it at one point in my career it felt insane to make that trade, but at this point it's you just go with the trend until you near historic RSI levels. That's how I do it, at least. So it ended up being a clean caveat put into my trading system that I will trade with the trend unless we're at historic RSI levels. And then if we're at historic RSI levels, then I can start taking shots, counter trend. And that was the game changer for me with commodities. It kept me out of trouble most of the time. Obviously, my discipline and execution isn't going to be 100% perfect over time, but in general, the longer I trade, the easier it is to believe my rules. We all have rules, or you ought to have rules, but sometimes we know these things, but we don't believe these things, and that is part of what has us making these boneheaded decisions. And fortunately, throughout my career, I learned to believe my rules more. So it's because you get the positive results from it. So it's not as difficult for me to say like, no, I don't want to short unless we're at historical extremes. Could we top before that? Yeah, I'm okay missing that. But if we get to those historical extremes, that's when I will look for the counter. So,
And just to cut you off again, the difference between reactionary and anticipatory is anticipatory would be scaling in short as we're still running and saying, all right, we're overextended, we got to top. And you know, a lot of people look at the silver chart and say, okay, 98% of the time, anything I've ever seen is topping here. And again, as Joey mentioned, this is the 2% or even less, where you have to protect against that because it happens. The 0.1% can happen, oil going negative or whatever. So that's prevents you from getting burned too much. And in terms of reactionary, it would be looking at, you know, today's volume and candle and saying, okay, now I'm this confident that a temporary top is in, so now I can be scouting those lower highs to be looking to try and go short, as opposed to, you know, trying to nail it on the way up. And then you get, you know, a 1 minute EMA 12 rider for 3 hours in the morning, and it's just grinding you, and you're just sitting there frustrated. And that's the other thing, just psychologically, it's so wearing. And another thing that I've noticed in terms of people getting into trouble is, again, stock traders going to commodities, and as Joey mentioned, not knowing the nature of the beast, but also instantly being at a disadvantage where they're trading the ETFs like SLV, and they're handcuffed for the majority of the overnight moves and all the things that happen there. And so you'll see people, you know, posting on Twitter like it's almost like they're calling it manipulation, that big moves are happening after hours. It's like, no, this is a global asset. Like, they're trading this around the world, and you have to be, you can't, in this very difficult game where the odds are so stacked against us, every little tiny edge that we can get in our favor is critical. And so to be knowingly avoiding or choosing not to have that aspect, and that's me, you know, I don't actively trade futures right now, but I'm aware of it. So I'm not using size on SLV and holding overnight positions or things like that. So that's been something to watch and observe as well, because some very well-known traders on Twitter, you know, taking some swings at taking some attempts at shorts and taking some big losses. And then of course all the, you know, hobbyists from the bleachers giving them junk. It's like, man, these people have made your lifetime gains are going to be 0.1% of what they've made, and you're going to talk smack. It's just sports. It's the exact same thing as sports. It's the fat guy in the seats telling the guy, "Oh, you should have done this." It's frustrating. But the real traders, the full-time traders, definitely don't do that. So it is always just the noise from the bleachers that takes a while to learn how to ignore.
Yeah, definitely takes a while to learn how to ignore, and that's something that I've been dealing with a bit through all this metal stuff, because for years when commodities weren't sexy and nobody cares about them, me and like 5 other people in the chart guys room are in the commodities section, trading these, learning the nuances of the space, and now that everybody's interested and everybody's trading it and everybody has an opinion, you can't win. Like we've been bullish in the chart guys room on the metals for several years at this point. Basically, once gold went into yearly consolidation and didn't see follow through, we went, all right, yearly bull flag. And if you go to the 12-month chart and look at that, you see the yearly bull flag. So we've had the bull bias since then, but along the way, when we get to historic RSI levels like we did today, we flip it around. And like the last temp top in metals, I was like a day or two early, 2 days early, something like that, looking for the top. And I got all-time high career hate, like in DMs, in comments, and I was just like, man, this stinks. It was the first time in a while that what other people were saying was like getting into my head. It wasn't messing with my conviction, but I was wasting bandwidth thinking about that versus thinking about crushing this short. And it's not because I'm a metals bear, it's because I'm a trader. I was long, and then I flip and I go short, and then I flip and go back long, and it's just like, people are always going to have opinions. So that was a good lesson for me to take a step towards believing, that same thing we're talking about of like knowing versus believing, and taking a step towards believing, just not caring what people are saying and what they are doing, because it's, I don't know, everybody's got opinions and a lot of people are haters. So when you have something like yesterday where long on the morning and then flip short pretty much at the highs, it makes it all worth it. And then it's easy to look at Twitter and everybody with the hindsight whatever, or the whatever, and just be like, yeah, that doesn't matter. What matters is my account balance right now.
Pull up a silver chart.
Let's have a look. Let's see here. So here we are looking at silver. Let's zoom that out. Turn off that. We're off log so we can see the real magnitude. We'll go to close by settlement. That's a move. That's a move. Go to log, levels it out a bit more, puts it into perspective. And for folks that don't know, log is going to make your y-axis a function of percent as opposed to a function of nominal distance. So the difference between 1 and 2 when you're on a linear chart is going to be the same as the difference between 89 and 90. When you go to log, that's going to be different. The difference between 1 and 2 is going to be the difference between 50 and 100. You see it as a function of percent, which levels things out. But anyways, big move.
Go to the daily. Let's talk about the potential for the climax. So one thing that was big for me, what's up with that candle on the daily candle?
It's right now where we have it set to print the close at settlement, which is like 2:30 p.m. Yeah. So I normally keep it off like this, but the early data on silver futures only recorded the settlement. So if you click that on, you get the previous data. So yeah, I usually leave it off because I don't care about settlement personally. Some people, that's part of their trading system. I care about where we close at 5 p.m.
So this new candle's only been trading for a few hours. We have the big bearish reversal candle from yesterday with the big push up. You give it all back. One thing that stood out to me was the SLV ETF. Its dollar volume was over twice the previous all-time high, which is just massive. And we know oftentimes volume climaxes can mark tops and bottoms, but also One thing that, you know, like bear markets are so tricky to trade because you see massive bounces along the way and, 60% plus retracement that makes it very difficult to hold short positions through it all. But so right now we have a very solid silver bounce underway as the brokers close at 8 p.m. And if this move's going to follow through, I mean, we haven't confirmed an hourly downtrend yet. So whether it's a 4 hour because more candles happen overnight or an hourly, we obviously need follow through from the bears. They have to prove it. And so this is a spot where, a trader is looking at this and saying, okay, I think that's the top, and looking for the lower high entries. And again, that's the reactionary approach as opposed to anticipatory, because at least now there's a level to play off of, a very clear invalidation point. And that's what's so dangerous about having vague theses of trades. It's we're way extended. We got to top soon. There's nothing that invalidates that. You go up another 50%, that statement is still true. And so having that clear, concrete level to say this is the top or I'm wrong, and using that as your thesis is so important. So just zooming into the 1 hour, we got a solid hourly bounce here, 50% retracement at the moment. This is the kind of setup where I scout, an hourly lower high and an hourly equilibrium overnight as the trading volume is lower, as things are closed on the US side. But we'll see. The bears have a ton of proving to do. And at this point, we haven't even hit hourly oversold. So that's one clue for me, is when back burners stop leading to continuation. So, 15-minute oversold if we drop to a lower low, and then hourly oversold, we bounce, but we drop to a lower low. Those are also indications that we have topped. So that's what we're watching for into tomorrow and the next day. And one thing Joey's been harping on is, me, I love rotation in all things markets. And he's been talking about how if it's going to be a meaningful top, he wants to see all the metals dropping together and showing signs, rather than, silver temporarily topping and gold remaining strong and platinum, hitting a new high. That would make him much less confident. If you want to touch on that a bit.
Yeah, I mean, it's the same concept that we use with the broad market, talking about whether you're using all major sectors of tech, financials, and healthcare. You can throw small caps in there as well. Whether you're doing that or you're doing the futures indices, in the end, the hallmark of a healthy bull market is rotation. Like we'll take a moment to go to my favorite chart in the history of the world, and that's the yearly, or we'll take it a bit. What am I doing? A bit further, we'll go with the Dow. For me, it's the S&P 500, but the Dow's got a little more data. The yearly chart, the lifetime chart, these things go up. Like, how can that happen? It's always rotation. It was how you get these big moves up. It's designed to go up because you have rotation. That concept does not only apply to the indices. It applies to cannabis names. It applies to uranium names. It applies to commodities. It's the game. That's how the game works. That's how people who know how to play the game, which that's half the reason this exists, is just for people with money to make more money. And the people who know, they rotate, they rotate, they rotate. So for me, that's the most valuable piece of information, is when that rotation stops. And the same can be said for crypto. When the rotation stops, that's a capital exodus. That's where you see a more notable pullback. And until we see rotation stop, then that tells you that dips are for buying. And then once we see rotation stop, that's where things shift. So in relation to silver, I'm watching gold, obviously, platinum, copper, and palladium, all five of those, to be looking to see, like, do we have money flowing from silver back into gold? Is it flowing back into platinum? So sometimes in history, everybody ends up going sideways, and then palladium gets the capital from everybody, because palladium's historically the turd. And then sometimes it's just like everything goes into palladium and everybody goes sideways. And if you're trying to short a notable top, you don't get stopped out as likely as you do when you're shorting a moving trend, but you're not going to get that like banger that you get a top and can just maintain a bear bias steadily down. So going to be watching rotation. And then the biggest thing really is EMAs. To go back to silver here, it's the playbook that we run primarily, or that I run primarily in the commodities room, that I'm always harping, is just EMA riders, EMA riders, EMA riders. And if we just take a moment to look at silver, we are a monthly 12 EMA rider. We are a weekly 12 EMA rider. We are a daily 12 EMA rider. Before that, we are a 12-hour 12 EMA rider. And these things, it's normal. You look at the gold chart, you can see similar things, and it couples with the heavy trending nature of these well. So that then gives you a steady framework to play these, whether you're looking for bull entries off of these EMAs or you're looking to shift your bias off of these EMAs. Because like, yeah, yesterday was a great short, but again, I'm a trader, so I am all out of my short, and then I'll readdress what we've got going on next time. Because at this point, have bears proven anything? No, we haven't even gotten to daily 12 EMA. So you can say, okay, I'm going to maintain this level of bullishness as long as daily 12 EMA is support. And then once that's lost, then we're going to be looking to weekly 12 EMA. And as a trader, how you can manage that is just, you say, okay, if you have a long position and you're looking to shift your bias to get out of it, you say, how protective do I want to be? How much of a leash do I want to leave on it? If you want a bigger leash, then you're looking at the larger time frame EMAs as your guide. If you want to be more protective, you're using the smaller time frame EMAs. And that same concept transfers over to aggression versus conservation if you're looking to buy. If you want to be more aggressive, you're buying the smaller time frame EMAs. If you want to be more patient, you're buying the larger time frame EMAs. So there's something for everybody. There's no right and wrong. If you want to be an aggressive bear, you're looking to short when the smaller time frame EMAs are lost. If you're looking to be a macro bear, you're looking for monthly EMAs to be lost. But this gives it a nice structure where it removes a lot of the discretion out of it. And I think that's one of the things that helps me the most in the commodity spaces. It's really like, I used to be a big time nerd about a lot of TA stuff. I learned many things, pretty much everything except for Elliott Wave and Wyckoff. And now I do such a simple operation, because for me, the structure and removing a lot of the discretion ends up being a bit of a superpower. It takes the burden off of me to, quote, like, be right. I'm just like executing a system, and I just have to decide, do I want to be aggressive or do I want to be conservative? And then I just need to buy off EMAs or sell once an EMA is lost, or short off EMAs if we're in downtrends. And it's just, it's nice. I don't have to think too much. It's a lot easier than having the big old whiteboard with all the connect the dots of the thesis and the fundamentals and like, well, this is the spread with China, whatever, all this stuff. That's what works for me. Obviously, there's a bajillion ways to play this game, and I'll never be like, this is how you have to do it. If you do it this way, it's wrong. Like, that's, anybody who says that is
Clown.
a clown, an egoic, unnamed clown. But yeah, we'll see on silver. Next step for bears, they gotta take out daily 12 EMA. If we're gonna get weekly consolidation, that's all we're talking, is maybe weekly consolidation. So like, it's a nice move yesterday, but obviously more needs to be proven. And at this point, if we're looking at the bounce retrace over 50%. So it's not uncommon for metals to top out just with a lower high and lower low. A lot of times on equities, you get just a big blow off and then you don't even come close to those highs again. Like if you look at all the rare earth names that had those big parabolic moves up, like the top, you can't even see it after a day of the top. That's not often how it goes in the metal space. So we'll see. But
couple footnotes. We got an EMA 12 rider webinar. If you Google Chart Guys EMA 12 or search it on our EMA 12 rider or search it on our website. And also the long-term charts, just going back to that, obviously currency debasement is a significant part of that. And that's a big part of why the metals are running. And so, you know, people talk about prices of the future, and it's like, well, if you got enough time and if nothing massively fundamentally changes in the way that capital and the US and the Fed have been working, prices are going to be higher over time. It's just how long, you know, are we going to base out for 6 years first or things like that. So that's obviously factors in these long-term charts as well.
Yeah, and on that note, I want to address macro plans, because a lot of people will ask me like, oh, well, what's your macro take on it. And for me, one of my biggest strengths as a trader is submitting that I don't know what it's going to do in the macro. So I'm a one day at a time kind of guy. And a good example of why this is so important is back before inflation started being a thing, we were working a thesis for yearly consolidation on gold in the chart guys room, and it was like a year and a half we were working this thesis. I talked about it a little bit earlier in the stream here, but when we finally got the confirmation that, all right, we broke the yearly stair step, yearly consolidations underway, we're targeting yearly 12 EMA, like that was the macro target. And then we didn't get follow through, and it formed a falling wedge on like the daily once we broke support. And if I had stuck to the macro thesis, we would have got run over. But it was easy to just be like, okay, well, bears have to continue to prove it. And they didn't continue to prove it. And if bears don't continue to prove it, then you flip your bias and you go back bullish. And for me, that I ultimately think it's a form of humility to avoid the egoic desire to like know what's going to go on. It's like fully accepting the uncertainty, fully accepting that we don't know, and then having a system for understanding the implications of retracement size and follow through magnitude, because that's ultimately what all this is. That's the love language of the charts. So submitting to that and just staying on top of it and asking yourself, okay, if bears are going to prove it, what do they need to do? If bears are going to fail to prove it, what would bulls need to do? If bears fail to prove it, what does that mean for bulls? And vice versa, and just always asking that question. So I got no clue if this is going to be a macro top on silver that ends up looking like 2011 and 1980, or if this is a true repricing and we're going to be trading at $500 an ounce. I have no clue. Nobody has a clue. Anybody who tells you that they do is stroking their ego on that stuff, in my opinion. I'm just a dude, and maybe I'm wrong, but what I do know is a way to reliably navigate the markets so that whatever we do get, because even if someone believes they know that, hopefully they're reasonable enough to understand that they could be wrong. And yeah, a one day at a time approach is helpful.
That's why for me, anybody that speaks in certainties, it's always a red flag. And it's an assumption of, okay, you haven't been playing the game long enough to be humbled to know that you have no idea. And that's always been something in the chart guys that I've driven home with people that come in and talk in certainties. It's like, I'm almost like with the water spritzer bottle of a pet, like, no, like, nope, that's not, it could be topping. The probabilities talking like that. And also noticing that, people where English isn't their first language, it's a little bit harder to drive that point home for obvious reasons. But yeah, anybody talking in certainties, it attracts the newer people because they want that certainty. It's almost like a little comfort blanket that keeps them, oh, this person knows, so I'm going to follow them. And they get more attention, but it's not the right way to be approaching markets. A little bit of a topic shift. Another conversation we had recently was about, go back big, about how earlier in my career, let's say 10 years ago, 10 years ago, so much of my trading style was top fishing and bottom fishing, just horizontal support and resistance levels and playing off of them and anticipating that they're going to hold. And so, it's a low risk attempt. If the support is $10 and we're at 10.05, making an entry, stop under $10 and looking for that to play out. And that worked for a long time. And that was one of my go-tos for a long time. But that has changed. The market changes. And in my opinion, it was likely because more and more people, the successful traders were doing that. And then more and more people followed it and started doing it as well. And then the market adjusted and started trading in a manner which punished all of those people. And just an example of that is, 8 years into my trading career, I started noticing, man, there's way more megaphones. And megaphone is just the purest example of stop everybody out that is using horizontal levels, because you break resistance, no follow through. You break support, no follow through. Resistance, support. And one of the major shifts in the last 5 years for me has been looking for flags that confirm with no follow through to mark the reversals. Whereas prior it would be, this support holds, it's a double bottom, we have confidence. And so many times Rare earth name MP. We were looking for a monthly high or low. We just confirmed a weekly bear flag, zero follow through. We were under that support for like an hour or two, and then just V-shaped right off of it. So you stop out the people that are using the stop off that key level, and then that reversal takes place. And for me, that's just a maturing market. And the market is always going to move to the, I would say, move to the path of least resistance. And for the market, the path of least resistance is stopping out as many people as it can and finding that liquidity on those stop outs. And so, we were speculating what's going to be the next major change for markets, especially with AI and, all the automation. Obviously, automation's always been a thing, but and just, playing the fun brainstorming game of what could the next thing be, and obviously not having an answer. It goes right back to that we don't know, but we have to keep observing and knowing. If we know in the back of our minds that the change is going to come and it's always going to be changing, and we're always going to have to be adapting to the changing market environment, that can at least keep us from getting complacent and recognize, hey, this thing that I keep doing has stopped working as well. So maybe the market is shifting or evolving. The markets are always evolving. And so that's just something that, has really driven home for me the last year in terms of, wow, this is way different than I used to trade. And so interesting to reflect upon.
Yeah, definitely. You want to be of the mindset. It kind of just taps right back into that concept of humility and just knowing that part of the game is adapting. The market is like a living organism or something. Like it's the mass display of global fear and greed, and with that it does behave like a living thing, because like we all are the market. So of course it's going to evolve. Of course things that once work are not going to work anymore, and I say of course, but that's not to mean that it's obvious. Like everybody has to learn the hard way that like, oh right, so right now I pretty much only buy EMA riders. There may be a time, likely will be a time, where that stops working and I need to carve out a new edge in the markets, and that's part of the fun. I think that's why you truly need to love this game if you want to make it, because you don't get to just be like, oh, I learned my technique and now I can do this for the next 30 years, the exact same thing. I mean, maybe it's out there. If it is, let me know. But it's a hunt. It's a puzzle that you can never quite solve. You can get it close, but it's always going to be evolving. So
one of the things that I was reflecting on is I've been reading the Market Wizards books and looking at the older ones from the 80s and a bunch of commodities traders. Number one, a bunch of them are saying the point of trending, how long, the sugar limit up run of this 1970 whatever, where it just limit ups 5 days in a row. But just there was a debate back then between these, OG major traders, where it's like some of them were like, yes, trend following is the way. And a bunch of them were saying, no, like trend following is not a reliable system. And in my opinion, over the next 30 years, the market then consistently proved, yeah, no, trend following is the way to go. And so that was interesting to observe, obviously in hindsight. But I would definitely recommend those books. I've had a lot. I didn't read any trading books for my first 12 years of trading. And that's just because everything was online and, YouTube videos and articles and things like that. But I have been enjoying these ones a lot. I read, Reminiscence of a Stock Operator. And so slowly dipping my feet into reading books. But I'm looking forward to the new one that's coming out. But I would suggest those just in terms of, nice, easy reads. You read a chapter because it's just Q&A, a little bit of a preface and then Q&A, and you read a chapter and then you can put it down for a week. There's no continuity in that regard. So I suggest checking those out. Let's read some questions here.
Yeah,
Red Devil's making noise.
The Red Devil's making noise. What's new? Let's see. What do we got? Trader Z90. Why did I move to Thailand?
We already answered that.
No, to summarize, just to experience something new. To learn about a new culture, to live a different way. And
if not now, when?
That's ultimately what it was. If I have a wife and a kid, I can't do something like this. don't have a wife and kid, so I can do something like this. So that's ultimately what it is. And the biggest thing is the people are really, really lovely here. They're really sweet. They're humble. They are content, and not in like a bad way, but they're just like very grateful people and very friendly people. So that was the main thing that had an impression on me, that I was like, whoa, that kind of feels like a big weight lifted off of my shoulders that I didn't really know was there, just like living in a more kind of like closed off, individualistic society. So I was just like, yeah, I want to see more about that. So yeah, it was a bit of a leap, because I truly believe that Western North Carolina is the most beautiful place on the planet. So I show people pictures and they say, wow, that's so beautiful. And don't get me wrong, Thailand's beautiful, but like I left behind what I think is the most beautiful, but it's for cultural experience here, and Thailand still is obviously beautiful.
Hair compliment, hair smack talk.
Back to back compliment and smack talk.
There's a decent amount of
Nice.
Thailand traders or Thailand viewers here.
Nice. Hello, everybody.
Someone from Chiang Mai, someone from Ko. Is that an island? Ko
Lipi.
Does Ko mean island?
Ko means island. Yeah, we are up. We're up outside of Chiang Mai.
We had to stop table tennis because it was a bit of a one-sided battle, and I lost the drive. It wasn't fun to always win.
That's one version of the story. The other version of the story is that we had a Chart Guys meetup. Oviron came from overseas, took the crown from Dan, and then Dan magically just never wanted to play again.
That sucked away some motivation.
I think we played twice after Dan took his first loss where he really wanted to win. Like, I'd taken some wins off of Dan, but it was always like, oh, I'm not wearing my contacts, or like, I had 2 sips of beer, like some excuse. He was never just like, wow, you best me. So with that, his mind he could sleep at night knowing he was still the GOAT. But he came, he was sweating. When Oviron was playing, he looked like he just got out of a swimming pool, and he lost.
It was so much fun.
Yeah,
that's the most fun I've had.
That's what he says. Then he never played again. So much fun. He never played again.
Well, at that point, I don't need to defend the title anymore. I have the U.S. title. He took the international title, flying in.
Yeah.
So some ringer flies him in from across the world to. Yeah.
No problem.
It was a good match. He won the first one. I won the second one, and then he won the third one.
It could have been on ESPN. It was a very good match. It was close. Let's see.
Bitcoin drop. So for me, it's just, again, the only hope that the crypto bulls have, in my opinion, is that metals rotate into crypto. And again, a lot of people deny it. I don't know why. Just look at the charts. There has been significant periods of rotation between the two over the last 2 years on the 2-week time frame. Just the periods where one is consolidating, the other is breaking out. To me, that's undeniable. Whether that happens now, I'm not going to say that's high conviction. I'm not going to buy crypto anticipatorily thinking that that's going to happen again. I'm going to pay extra attention to crypto when it's clear that the metals have topped, and have a thesis and game plan where, if we start to see relative strength continue to show itself day after day, then I'll make an attempt and say, okay, that's the low where I'm wrong, and we're gonna head. And I've already got a Bitcoin position just from utilizing my edge playing oversold bounces where I'm risk free and I'm just letting it play out. But for me, it's worth paying attention to, but not high conviction. Prove it. The charts have to prove it. And so much about the combination of fundamentals and technicals is you have a thesis with fundamentals, that's fine, but the chart has to tell you if that is true or not, because so many fundamental theses are wrong and don't play out. It's always got to be in the chart. And so, that's been a lot of the start of 2026 with all the focus on rare earths and uranium and things like that. So someone comes to me and says, hey, uranium's in a shortage supply and we're starting to build more reactors and things like that. Okay, that's great. I don't care. But you show me a uranium chart that is going to consistently show me relative strength and show me an EMA 12 rider and clearly outperform the majority of other sectors. Okay, that's true. That's a true fundamental thesis because the price is telling me that it is. So it's the same thing for crypto.
And that's a really important concept just with the theme of reactive trading versus anticipatory trading. In a heavily rotational environment, like we've got in metals right now, people will be inclined to say, oh, silver just went to new highs. This is like maybe a week and a half ago or something. Silver just went to new highs. Platinum isn't there yet. It seems like I want to long platinum so that it can follow silver. And it can make sense in your mind when you think about it, but that's in practice, that's just not a practical way to consistently navigate the markets. Your odds of betting that the status quo remains are a lot higher than your odds of nailing the rotation between silver and platinum. If you are going to go for that, you want to be using ratio charts and look for a technical change there. But in general, you can just wait and have a reactive approach and say that, okay, platinum's in a daily EQ, silver's pushing to new highs. When platinum breaks its daily EQ to the upside, I will then look for rotation into platinum from silver. And instead of sitting in platinum for a week when it does nothing while silver rips another 10% or whatever, you are in silver while it's ripping 10% because silver has said, hey, I'm the one that you want to have your money in right now. And then when that shifts, that's where you shift your capital. So same thing that Dan's talking about there with crypto. Same thing talking about like small cap rotation or rotation into junkers like RIVN, PayPal, like all these, Roku, all these things that the junkers. I don't know what else to call them other than pieces of crap.
I can answer this one for Joey. If you were primarily an equities trader, it would not be suitable to be living in Asia. I couldn't do it. It's the hours. It would be maybe for swing trading. The first hour, I could stay up 9:30 to 10:30 p.m., try and position in the first hour, and then go to bed and hope it works out. And there's nothing wrong with that. Some people probably do that pretty successfully. But day trading, no, you can't do it.
Yeah, if day trading, your strategy would need to be something along the lines of just like an opening range break style system where you historically make the vast majority of your gains in the first half hour or hour of the day. And this is obviously if you want to have a normal sleep schedule. Some people like the nocturnal thing. If that's you, then yeah, obviously you can do whatever. But it's tough in the winter when the markets, when it's a clean 12-hour flip to Eastern time zone, the markets are opening at 9:30. The sun's setting at 5:30. I'm awake and asleep with the sun. So by the time that comes around, I'm tired. So it definitely helps me that my specialty is futures and internationally traded futures at that. But also since the beginning of 2023, I've been shifting more towards swing trading. That's where the bulk of my gains have been coming from.
Not on silver, just when it's this volatile, it's more day trading.
Yeah, it's like swing trading equities is what it was for a while. I had my first futures swing banger this year once after I had moved to Thailand on an NQ swing. So that's my current focus, is to try to get better at swinging futures, because basically I cave on my discipline once I get in a future swing because they're so leveraged, and you can, if you trust the larger time frame and you get good positioning, you will be up a lot pretty quick. And it's difficult for me to not just be like, wow, I've made X amount in X period of time, I'm just gonna lock it in. So it was totally had to be out of sight, out of mind, different account, and just forget about it to let it happen. But yeah, it's tough. I mean, you're on a clean 12-hour flip from the Eastern time zone. So you can definitely do the first hour of trading, leave a runner, see if the market blesses you overnight. But it'd be better to be a futures trader for sure with that.
For silver, with the 5-minute back burner, not marking the low, it gets a lower low, but no follow through. How would someone trade that? So if you're going to get to 15-minute oversold, 5-minute oversold is going to get a lower low by definition, pretty much. Sometimes they can happen on the same move down, but that's a bit more rare. So generally, if you're getting that lower low on the 5-minute, then you go to the 15-minute and look for oversold. There are obviously times where you get 5-minute oversold, you could get a lower low with no follow through and not get down enough for 15-minute oversold. In my opinion, that would just be a function of what we were just talking about, where that horizontal level breaking to stop some people out and then seeing that reversal. But I would say that's not the most common scenario. That's not what happens most often. And for me, that would just mean, again, there are plenty of times where I'll take a 5 minute back burner, sell partial into the bounce, stop under the low, and stop out. And for me, that just means, okay, now I'm zooming out and I'm focusing on the longer term time frame, because the shorter term time frame didn't work in its ideal manner. And again, obviously, it's not every time. There's going to be instances where the 5 minute lower low then leads to continuation. But that's not the most common scenario at this point if you're looking at a sample size large enough.
To kind of touch a little bit more on that previous concept, somebody said, do you just accept that you're going to make less money trading in Asia? No, I'm actually making more money because it's pretty sweet. I'm making more doing less, so it feels like a cheat code or something, because I just am leaning more on swings, and I haven't even really been in solid swing positions in a few months now at this point. So metals volatility definitely creating a lot of exceptional opportunity, and that's a big portion of it. But yeah, my goal is to continue to do less and make more by flexing my discipline and my psychology, as opposed to flexing my work ethic and my grind. Like I did the grind for 7+ years, I guess in 8 now, maybe. I don't have my calculator, but I did that, and now I get to kind of leverage the benefits of that, and that's just about being right and sitting tight. So times will change, and I'll continue to adapt. But if I do make less for a bit, for me right now in life, I feel okay with that, because life is not about making money, and I would have been pissed if I died somewhere in that last 7-year grind, because I didn't have a life. I enjoyed the game, don't get me wrong, but there was no balance. I didn't participate in extracurricular activities. I didn't date. I didn't go out with my friends. I didn't party. I worked and I worked and I worked, and I knew that it would set me up for my future. But if I had broke my spine and was paralyzed after that, I would have been really, really bummed out. But now I feel so much more fulfilled because I have more balance in life. I'm going out and doing things, and that kind of started in 2024, where I pulled out a little bit. But yeah, the money will come. The money will come, and if I take 1 year off of trading and do nothing, that's fine. I want to feel fulfilled and feel happy with my day-to-day activities.
So advice for a beginner who is getting to learn breakouts, does it make it pointless? So when we're talking about the change of the market, we're talking a decade period. So if you're, learning to trade and you're trying to find an edge, it's not going to be like, 3 weeks later, the thing that has been working, for so long is now no longer a thing. So no, I mean, breakouts can still be something that you trade. For me, I don't like, the only time I'm buying a breakout is if it's a really tight equilibrium and tight balance. Otherwise, I'm looking, you can look, Lamont style is looking for the back test of resistance as support to make an entry, to look for that continuation. So no, not pointless. Again, it's too, the changes are too subtle and zoomed out to make it pointless, in my opinion. You can still learn, and so much of what you learn is going to be applicable throughout, regardless of what the market does, whether it's risk management, whether it's your process and your routines, all of the, your experience, getting your emotional state able to adjust to solid losses and be able to shake it off. All that stuff is applicable no matter how the market behaves. So pointless is not the word.
Let's see, we got a lifestyle question, or a couple of them, I guess. What does your sleep schedule look like? Are you on Thai hours, or do you shift a bit? I'm on Thai hours. I go to sleep roughly with the sun, and I wake up roughly with that. And yeah, so that's pretty much that. And I primarily trade futures, so commodities and index futures. I swing stocks. I don't day trade stocks anymore unless we have something like big time GME volatility, or I day traded the quantum tops, but other than that, I don't look for it. And then I will trade crypto when crypto is worth trading. So yeah, that's pretty much that. But as far as what does a day in the life look like, I wake up and immediately am onto the charts, into the chat room, and I will do that for a few hours, and then I stop, and then it's like almost halfway to being retired, because during the day here, everything's quiet. Back home, I certainly have been trading the Asia sessions more, but that's just like grab a 15-minute higher low off the 12 EMA and then let it play out during the day while I'm doing other stuff. So I get to just live life. I go out. My main thing is going out on the scooter and just exploring the mountains, exploring the villages, trying to find cool stuff. So I'll do that. I go to the gym often. I will just relax here on the property. And then around 5 p.m., I start to lock back in. I'll eat some food, start prepping for the day. And then some days I'll be asleep before the market opens because I'm tired, and I'm not gonna stray from what feels natural too much unless there's something like the silver. Last night I was up till 3:30 or something like that trading silver because this is an exceptional opportunity and I pay the price, and most of the time it's not worth it. But yeah, decently good at picking and choosing my spots to try for something like that. But yeah, it's pretty neat. Kind of like halfway to being retired.
Hey, Royal Sun from Bali, thanks for the support. Most people have been following us. The long-term followers, 2017 was a year where everybody hopped on. So nice to see that continuity 8-9 years later.
Let's see, any tips on silencing macro noise while picking out actionable news? Also, is moving into swing trader a natural progression of a successful trader, managing portfolios, etc.? Tips on silencing macro noise: just don't look at it. That's my biggest tip. Like, honestly, I regularly forget that we have a news channel in the Chart Guys that's hooked up to the Twitter accounts and has it all come in. I personally, it doesn't help me, so I am never looking at it. And as far as silencing like macro noise of people on Twitter, just don't listen to them. So that's one way to do it. The other way is if you want to be more informed, which there's nothing wrong with that, you just need to have parameters on what your bias is. Kind of what we were talking about earlier with the reactive stuff. If this macro thesis is going to be right, then monthly 12 EMA is going to remain support. If this macro thesis is going to play out, then we're going to confirm a monthly downtrend. Like talking about the David Hunter thesis, something along those lines. Like if we're going to see a huge generational dump, probably going to have a monthly downtrend. If we get a monthly downtrend, then we can say, okay, let's take a step back and see how far this could go. So all about just making if-then statements. If we're not in a monthly downtrend, then the broad market is not overly bearish. If metals are holding monthly 12 EMA, then they're macro bullish. The simple things like that can help you stay on the right side of things. And as far as moving to swing trading, a natural progression of a successful trader, yeah, that seems to be the theme. Dan certainly did that, and I'm following suit. It's like you need the day trading, in my opinion, to get the reps in, because the number of reps that we've gotten by taking 1 minute stair steps, like I needed those reps to be able to, at the beginning of 2023, say, all right, I'm taking this weekly stair step on Tesla out of weekly oversold conditions. Like if I didn't have those reps, I wouldn't have had the confidence to put all of that risk on and how to manage it and this, that, and the other thing. So yeah, seems to be the progression. And you just burn out. It's not healthy to sit at a computer for all these hours, and then if you're a successful day trader, you get pushed with this like, are you truly just addicted to the game, or do you do this game to have freedom elsewhere in life? And if it's the latter, then you start to leverage your knowledge in different ways, and that's swing trading. And man, to make money doing nothing is sweet.
That's a conversation that we just had was, Joey's mobile setup and he's on his phone and all that. And I was talking about how like I don't even log into my trading view on my phone. And he's like, oh, it'd be so easy, you're a boomer. And my response is, if I'm trying to quit alcohol, I don't keep beers in my fridge. It's just me putting a degree of separation to make it, because it is addicting, right? It's the most unhealthy thing about my life is the screen time. And so it's putting these little things in place to ensure that I'm not going on vacation. And then, this is an exception because, we're traders and it's fun to trade together. But, going on vacation, but then, well, I'll go to the beach in the morning and then come back and sit on my monitor and I'll play some trades. And I just want to remove that and just, no, I'm on vacation. The markets are over here at this point. And it takes a ton of work because, again, anybody that's a successful trader full time goes through the obsession phase, and flipping the switch to turn the obsession phase off requires a lot of work because it is an addiction. It is a dopamine drip. It is all that stuff that are associated with all the substance addictions aside from the actual substance itself. And it's tricky. And so I choose to make it more difficult to prevent from that easy slip back into it.
Let's see, we got another question about commodities. Do I trade other commodity futures besides precious metals? I do. I do oil, I do natural gas, and it's worth noting with natural gas that kind of this concept of commodities trading different from equities. Natural gas trades different than commodities. Like natural gas to commodities is like commodities to equities. So it's just that next tier of extreme, and it's a specialty instrument. It trades differently. So to build proficiency in natural gas, I had a period over 7 months where I only traded natural gas, and it took a while to get it honed in. And in the community, we got a playbook that I wrote out for natural gas in 2021. It's pinned in the channel, and that's still the way to trade it. But yeah, anyways, the energy, the metals, and then grains as well. So to talk about grains, I gotta talk about wheat real briefly. Grains are historically range bound, and we're looking for a yearly higher low. You zoom out, you got one big range for a while, and then you break above, and now you got another big range, and now we're down here looking for a yearly higher low. We've got this infinity wedge, or not an infinity wedge, it's just a proper wedge. And yeah, when this pops, everybody will be talking about grains, in my opinion. But for now, it's just a grind, and this is where you want to be reactive. But it reminds me of GME, this wedge that was just going on forever and ever and ever. It's very similar, and I'm hoping for something similar. But yeah, until then, I'm not doing much with grains. But yeah, corn is like one of the most liquid markets out there. You get like 500 contracts on the bid and ask, like almost at all times. So grains are great, and the grains are corn, soybeans, and wheat. That's what I do. I don't do the soybean oil or soybean meal. We've got some Chart Guys members that do that. I do not myself, and I don't do rice because that's very illiquid.
Can't say do good things in Thai. One of my favorite things is honestly $5. You're making so many people's days with a tip, and it's not expected. And so, like the other day, I put an extra $3 on a tip at a meal, and the local connection was like, no, you don't need to do that. And it's just like, if I can make someone's day with $3, that makes me feel good. So that's been my favorite part about Thailand, is how easy that is.
What up, Rob Golding? Definitely Rob G, as he was known in the Chart Guys. Hello. Let's see. Tony says, how much does it cost per month there? I mean, it depends how much you spend. You can pay for luxuries beyond anything that you've experienced before and spend a bunch of money, or you can live pretty inexpensive. In general, I would say most things cost like 25% of what they do in the US, something like that. So it's significantly cheaper.
How do you separate long-term positions from swings? Different accounts, or you take your Bitcoin off the exchange. You have physical metals at a secure location. They're just completely separated, just like I do with my day trade account and my swing trade IRA account. That mentally helps me significantly. In my opinion, it's the same thing. I do have my long-term no-touch SPY in my swing IRA, but we get another solid leg up. I'm gonna start taking some scale outs of that position that I've been in for 5-6 years. So yeah, just separation, so you're not staring at it every day.
Let's see, looks like the last question we got here for swing entries. Are you playing higher time frames, like hourly instead of 5-minute chart? For me personally, I like to drill down to the smaller time frames because I'm only really interested in swing entries where we have key location, and I will essentially be willing to take multiple shots looking for, say, the 5-minute trend change that leads to the hourly bounce, that leads to the hourly trend change, that leads to the daily bounce, so on and so forth, and have that extrapolate all the way out to being a weekly higher low. And I'm willing to put in the labor to do that when we're in an area of interest, because then I can have a much bigger position size. So that's what I'm doing most of the time personally. But then sometimes, like I was talking about with the Tesla weekly stair step, I will just do a larger time frame thing. Kind of depends on bandwidth and desire to put that bandwidth in, how much risk you want to take, and that. But Dan, you similar?
I'm done. We're over an hour. My brain shut off.
Okay,
not listening.
I'll answer. Dan's similar. But yeah.
What's up, Dinsey?
What up, Dins?
Click the like button, please, and comment and share and all that good stuff. We're gonna go enjoy the day. It's now breakfast time.
Yeah, 9:08 a.m. Gonna eat some breakfast. Gonna get on the scooter, boogie out into the mountains, go to a new waterfall, and then come back and pack up, get ready to go down to the island. So thank y'all for tuning in. Always a delight to get on stream. It's been a while since I've been on the YouTube stream, so it feels good. So hope everybody has a wonderful night or day wherever you are at, and we'll talk to you next time.